Hey, everybody. Welcome back to the Blockware Intelligence Podcast. This week, we have a very special guest, CL, who's a derivatives trader and expert in the space. CL, thanks so much for coming on, man. How you doing?
Yeah. Very, very good today. Just had my breakfast.
Nice, nice. Let's first start with, for anyone who doesn't know, who are you? When did you get into the space and what do you do?
I just trade and I got in 2018, like end of 2018. I think I bought Bitcoin and it nuked like from 6K to like 3K immediately after I bought. So, and then yes, and then since 2019, I just traded and found that extremely fun. I just had for some reason I just had like a very like I just felt like I needed to know why price move at all. And like since then it's been I just been trying to figure out why this market move one way or another. And yeah, and now here we are.
Do you have do you have like a long-term Bitcoin thesis, or did you just come into this saying like, oh, this is like a degenerate market, like this is like really interesting and will like, keep me interested all the time with all the volatility in the market, or like, do you have some kind of like longer term crypto slash Bitcoin thesis?
No, actually, yeah, I do, and I've actually flipped a few times. So when I first got in, I was like, dude, I'm so poor. I need to make money. And then I found out what like Bitcoin is. Then if I found out what Ethereum is, I'm like, wait, these two things are really cool. Like, damn, like the idea of like just like yeah, just like most people can describe like the big picture thesis of Bitcoin and like maybe Ethereum, but way better than me, right? Like all these articles people already put up, but just like the idea of like your own money that like it's just immutable and no one can change it and like it's just yours is very powerful in my opinion. So I do have like a long-term thesis, but that doesn't necessarily in is that it's not involved with my trading. Like if I don't feel good, I will sell. Like it's I'm like not as attached if that makes sense.
Yeah, no, that makes total sense. And kind of like going off of that, pretty early on, you were involved in a fund. So I'm curious, like, A, what was that like? And what is the difference between like working at a fund versus managing your own personal capital? Like, do you prefer managing your own personal capital? And like, I guess, what are the key differences between the two experiences?
Sure. I would just also give a tiny bit of history, just like half a minute. So yeah, in 2019, after I traded myself for about a year, in 2019, I joined a fund and I was immediately given, not immediately, but like shortly after, I was given an account where I can trade on. And that actually was maybe one of the key reasons why I'm profitable today, um, is because I finally realized from the perspective of like someone who has a larger sum of money. Because like obviously when I was just trading by myself, I didn't make that much, and it's not like I had much to begin with. I just like had like a few grand, and but trading was on an account and back in the bear market that had like seven figures was like very eye opening. I like finally started to see like wow, I need to be selling into strengths to like because this is like where there's actual buyers. And if I don't sell it now, I sell it later when the market is like the move is over. Like there's gonna be the bids are gonna be way less thick. Like I'll actually move the market down way more slippage and like all these factors. Like it was very different from trading my own way smaller account. So I was like, wow, this is like and that just like that perspective just made me realize like wow, like most moves happen actually because bigger traders are trapped in position rather than a group of small traders. And these groups of bigger traders being trapped in position, I think, is what moves most the market by the most amount.
So
Yeah.
back then, like seven figs would like significantly move the market.
Oh yeah, definitely. Like if someone
That's
market
crazy.
buys on BitMEX like $6 million, it would be forwarded to every Telegram like trading chat I'm in like immediately. Be it someone be like, holy crap, like this 1 minute candle is nuts. Like he just bought 7 mil. It's like barting up. It's like the market used to be thin. Yeah.
So, like, I guess what would be some of the like biggest takeaways that you learned aside from just like realizing, sizing and how that kind of like affects the market. Was there anything else that kind of taught you like just how to read derivatives data? Like, was it just through experience, or was it like, just talking with other people, or like, how did you like gain all this knowledge? Because, you're one of the like the main people that always gets referenced whenever I'm talking about, derivatives data in general. So was it just like messing up and, losing money through the fund that taught you that, or like kind of walk us through that process of like, how did you gain all this knowledge about derivatives?
Yeah, definitely all of what you said helps. Like losing money and then like as like kind of just like paying tuition to the market as part of learning, understanding why you were wrong. Like you could be like say bullish and then say the market was wrong, but like the market can get more wrong than you expect and stuff like that. Just like um yeah, like you always need to keep in mind and just like yeah, talking to a lot of people helped me definitely a lot because then but over time, I think I what I did the most was still by myself. I remember entire 2019 and also 2020, pretty much most of it was just staring at every single trade that ever happened on like the major derivatives. So like back in 2019 was probably yeah, it was mostly BitMEX, but in 2020 I had to monitor Binance too because it just got too big. And just watching like every trade happen, like figure out what kind of positioning they're taking. So say for example, oh, today a lot of people open positions. Okay, let me go see the exact moment they open positions, see how that impacted the like the futures like see how like these traders pushed the price of that product away like further from other products to like get an idea of their whether longing or shorting. And like if all of them were long, then that specific futures contract would be trading higher than like almost every other venue. And then like you would know like, well, okay, these traders will have to close, every long ever will have to close, every short ever have to close. So it's almost like, oh, if that what I said just happened, that's like almost guaranteed future selling pressure. And just like stuff like that, I would just keep monitoring, and like I would keep every trader in mind what their liquidation might be, what their invalidation might be, what their why did they try to like make a breakout trade here? Like are they drawing lines, or are they also seeing other, but like are they seeing spot buying and going with the flow? Like I try to like feel why every trader is there and like think where they might get invalidated. And like there would be like levels where like a lot of people would like choose to be invalidated, and I try to abuse these levels a lot. I'd be like, I'll just like yeah, like take profit into like way above like say where their invalidations are. Usually these are like very high volume and like market goes to extreme sometimes. Yeah.
And like kind of on a similar note, what do you look at like when you wake up in the morning and you just want to get like a quick like market edit, like, market overview in like, 10-15 minutes just to catch up about like where the market is overnight? Is it mostly derivatives? Obviously, you're checking price in the morning, but like, what are some of these things that do you have like a checklist, or is it like a dashboard that you have for yourself, or like, how does that process work for you?
Right. So I wake up, like say today I woke up and I saw ETH moved a lot. So I try to figure out why that happened. And it did seems like FTX spot had a bit more average than volume. So I was like, okay, that may have contributed. And then some open interest been moving down on FTX. Let me see also. Oh yeah, so some Binance longs entered, not that much. So I just kind of like be like, okay, so that's what happened. And then I would just like see how much volume is being traded to get an idea of like how like just how much what do you call it, like yeah, just how much of existing participants, mostly traders, are swapping hands. Because like that's important to me, because like I need to know like if traders swap their contracts against other traders, because then it means like, okay, say ETH was higher today and a lot of volume was traded, then I would know, okay, maybe longs at 2,500 today or 2,400 that opened probably sold to another person that long at 2,600. So now I have to rebuild my profile of the current trader. traders that have positions. So it's like, okay, now I need to shift some of the profile in my mind to that some traders are now long at 2600 and may also be short. And then I'm like, okay, if traders are now long at 2600, where their invalidations might be, where like just where like if it keeps going higher, where shorts might start folding even more, like just have an idea of like I'm constantly building a profile like just in my mind of like where like what how the market is positioned basically.
Makes sense. I want to dive into like a little bit of like kind of a derivatives 101. As concise as I guess you can make it, and then we'll move on to maybe a bit more interesting stuff for people who are maybe a bit more sophisticated. But let's first start with like what is a futures contract? Like what is the purpose of a futures contract? And then what are the different type of products that are offered in the Bitcoin market? Whether that be actual like 3 month futures contracts versus like a perpetual swap.
Right. So futures is just like two traders, or it could be a market maker, like um agreeing to just like just kind of like settle where they sell and buy. And it's like usually people do it for like actual things. And the like maybe it wasn't as degenerate in the past. Like farmers actually sell how much rice they would have 3 months later now because they think it's a good price to lock in their profit and in case price of rice drops for some reason. And like but now it's like in crypto it's a bit more weird because it's like you can just buy sell spot, but we're trading this perpetual thing. That's like basically it's the same thing except you can get leverage on. So maybe the only benefit is like you don't need all your coins or like all your like USDC in like on the exchange to like have the same buying power. Like you can say have 1/5 of your net worth but use X5 leverage, and that then it's like okay, you have the buying power of your net worth, but like because of leverage you can like uh basically as if you have your whole portfolio on there or something. But usually futures are like the types that expire. So like say some rice farmer is like, oh, I'm gonna sell my rice at $10 a kilo for June. Then and by the time June comes, their crops actually harvest, and they already locked in the price which they sold their rice at, so they're happy about it. But in crypto is like it is the same thing where it's like maybe miners use it. Maybe that's would be like the most common analogy is like miners selling their future rewards. And usually these futures would also be trading higher than spot price because of like power of leverage, like they're just pushing it up. But yeah, I think mostly these in crypto, these are just instruments for speculation.
Yeah. And I guess like on top of that, we started talking about perps a little bit. What is funding and how is that, how is that mechanism baked into some of the pricing between the perp contracts, and as well as like what's the dynamic tying, perps to the weighted spot index there?
Yeah. So the perp kind of is just like a non-expiring feature, and I don't think these were super common like outside crypto. And they basically like depending on the product, like you gotta like read the product's specifications, like or I mean the contract specification on like what you're trading. So like on Binance would be like every 8 hours, on FTX would be every 1 hour, where the everyone that have a position on would pay a fee or receive a rebate based on if the contract was trading above or below the index. And that's mostly just an incentive to keep the price same as the index. But really, I think because of also that mechanism also like helps like arbitrage have faith in like that product being in track, like have faith that it will track the price. So it also like I feel like a lot of times traders would strongly push a product very high, and like because they know they would get like because they know like the funding thing exists, that like these so like people have incentive like, to like sell that product to like keep in line with the index.
When you're looking at funding, let's say for example, like funding is negative. How do you say that perhaps spot is leading the perps rather than perps are fading spot? Is there anything that you can look at to kind of get that to distinguish the two? Because I feel like sometimes we'll get on Twitter, at least you'll get people saying, and I'm guilty of doing this in the past, of saying, okay, well, perps are fading the rally, and that may not be the case, right? It may not be that like shorts are piling in. It may just be that spot is leading aggressively, which is driving up the average weighted spot index price. So is there anything that you can look at to kind of distinguish between perhaps when spot is leading or when perps are fading?
Yeah, there's actually very many scenarios where why funding can be negative. So say on a way down, like you could have longs that have opened month ago, and there could be a lot of them, right? They because say price went down, they are afraid of liquidation and they have to close. So they may be like selling or like or even shorting just because like to hedge another long that like maybe they longed another coin. They're like, oh, let me hedge ETH because like they're correlated. Like I don't know what, like traders do all kinds of like stuff, but they need to like either sell one or another thing to like hedge their existing or like just like close out their existing underwater position, say for example. And usually on a downtrend, like bids are just thinner. So like naturally they as they sell, they just like push derivatives just ever so slightly lower than the spot price. And so that's like one way it could be like pushing funding negative. And that's not necessarily like, yeah, it's bullish that there's less longs now. So in the future, there's going to be less longs to dump on us, right? Like, yeah, that's a good thing, but it doesn't necessarily mean that like traders are now going to open longs that push the market back up, or does not necessarily mean the spot buyer will suddenly appear and push us up. So yeah, that's like, and another situation would be like, say, spot is actually mildly selling at the moment, or like, or just like buying, or yeah, spot could be selling and perps can be shorting at the same time, and funding would be yeah mildly negative. But since both of the flow are so like sell heavy, it just goes down more. And like as spot sells, they also pays out the shorters, and yeah, just like there could be very many scenarios.
Makes sense. And then as far as open interest, can we just get a quick, open interest 101? How do you use that in your own like kind of personal trading?
Yeah, so usually so open interest is just like how many contracts are open on that exact product you're looking at. And I actually don't strongly suggest this is for traders, I guess. Don't strongly suggest them to look at aggregator ones and only look at the products, the open interest of products that actually move the market by or like lead the moves, because then like that's where the positions are actually dominating the moves in the market. Because like I feel like that's just way more better for to get a sense of like where the aggression and stuff is. And and I also like look at it to get a sense of how volatile things might get. So if on products that are like very degenerate, say like the Binance futures, and it gets very, very, very high, I would start being worried about being in like any form of like, unless it was like the funding is ultra biased in one or another way, then I would be like pretty cautious in taking positions, because then I would know there would be a lot of liquidations if we move anyway. So maybe I could like open like I don't really trade options, but like yeah, maybe you can like open some sort of like vol strategy. But generally, yeah, it's like higher open interest usually like is a hint of like a bigger move coming. And usually massive moves in crypto usually leads to like open interest getting wiped. Uh, I think the common thing, there's a common picture people share a lot where it's like price up, open interest up is like strong. And it's like that can literally, to me, is like completely irrelevant. Like to me, it's almost better if it's like open interest is down, because then it's like a short close that move is way better than a long open that move, just in my opinion. So yeah, I don't think the common like things a lot of people share about on this topic is correct.
Makes sense. And then as far as liquidations, what is a liquidation and how do you implement that into your trading as well?
Yeah, actually, amazing question. So liquidation is like something like that also moves the market significantly, and usually you can like say we consult like in January we been consolidating in January for like over 2 weeks at like just low 40K, right? And with that information, you can assume, oh, like if we drop 10% from there, every X10 long will be liquidated. So, because we've been in a tight range, you can basically assume the average long price is the range, right? So, like, then you can just like move 10% away and be like, okay, this is, if you were short, this is where you would like take profit because not only that is like liquidity for like bigger buyers to like buy into, it's also like liquidity for like other big shorters to like take profit into without slippage, right? So like yeah, so that's how I see it. And usually it's always a pretty decent idea to like fade liquidations because especially like massive moves because they are usually just like market becoming very imbalanced if especially due to like a lot of liquidations. It just means like one side of the contracts are being wiped out completely, and then you would usually just have the other side left. So if like if massive short squeeze, then you would kind of like the only positions left on in the futures would just be longs. So usually it is a decent idea to just like fade it. Usually like at least in the like short mid time frame. Yeah.
Makes sense. And going back to open interest, can we talk about like the collateralization of the futures contracts in specific, just like looking at stablecoin margin versus crypto margin contracts and kind of the risk profile of both of those? And then I guess I know I'm throwing a lot into this one question, but then as well, like, can we talk about the evolution of the collateralization of those contracts, especially over the last year or so, as we've seen a smaller portion of contracts margin with crypto versus stable coins?
Sure, I can talk about the history too. So in the past, there's only two types. Actually, in the past, sorry, there's only one type. It was just coin margin only, which means people are using crypto to as collateral to trade crypto, and that was so popular in 2017 on like OKX. But actually, OKX was still small, but like mainly 2018 was where BitMEX and OKX took off, namely BitMEX, and people would just deposit their Bitcoin and trade Bitcoin. And over time, that was very dominant until 2020, about March, where BitMEX like just got absolutely destroyed on March 12th, and people started realizing maybe like and since people tend to like going long, right? Like people just realize like wow, like using Bitcoin to buy Bitcoin is like a horrible idea because like all the like your collateral is like shrinking as price drops as your longs like suffer like negative P&L as like so it's like everything's going against you. It's just too much, right? So like people started moving toward like stable coins based futures, which actually came out before 2020. I think it was like mid Q2, Q3 2019, Binance started introducing their product, but it was very tiny up until March 12, where like traders seem to have like a group seemed to have like moved over from like BitMEX, Bybit, etc. to Binance futures, where they're like, oh, like COVID crash, it's so bearish. I can't have my collateral in Bitcoin. There's no way. I need to hold stable coins. There was like a strong narrative for that among traders I remember back then. And naturally, if you're holding stable coins, you're also like not as bullish because you're like, I don't even own Bitcoin. Why do I want it to go up? Right. Like so there's just inherently more like shorts. And that's been very healthy for the market since ever since March of 2020. And although after like a year long, 2 year bull market, sorry, it seems like people have like kind of given up shorting as hard as before. Um, but even then, it's still pretty good because like on stablecoin margin, your liquidation is always way lower than a coin margin long, and then also a coin margin short can have no liquidation because like he might just be selling an X1 short that's kind of like just being hedged. But like any short on stablecoin margin have a liquidation price, and that's pretty powerful because like they're always watching out for their shorts to close rather than their longs to close. And like you can literally be X1 long and you will never be liquidated too on like stable coins. So that's just another thing I factor into when I look at the Binance open interest. I can just be like, wait a second. Half like a third of this open interest can literally be like absolutely non-degenerate longs that are like X1 or even sub X1 long, right? So I tend to like take that into like consideration when I look at the open interest. Yeah.
Makes sense. And so would you say like stablecoin margin contracts, like as we kind of talked about, crypto margin contracts are more likely to get squeezed, from the long side? Do stablecoin margin contracts are they more likely to get squeezed from the short side because they don't have that kind of like inadvertent hedge, if you will? If obviously like if your margin with Bitcoin and you're short, even if the trade is going against you, your collateral is increasing in value. So, like with that being said, do you think that stablecoin margin shorts are more likely to be squeezed?
Yeah, for sure. Exactly as you described. Like, yeah, I think it's like the more violent short squeezes has definitely been on stablecoin margin products. Yeah.
Makes sense. I do want to kind of like pivot to like the evolution of market structure. So you kind of talked about this briefly with BitMEX, but let's talk about just the complete evolution of the different products that are offered in the Bitcoin market and like what does that look like from when you initially got into the market to where it is now?
Right. So when I initially got in was like I would say more like actual trading was like 19 instead of because I got in pretty late in 18. And honestly, the only place you should be trading at back then was BitMEX because like that's where a lot of volume was being done, which means you can actually get your position filled very quickly, get in and out without much slippage, or like usually way less slippage than other venues, and that was just like the absolute like the biggest exchange by far. And then we would have like Huobi and OKX that probably does half as much, but they were still pretty dominant, especially their quarterlies futures. And yeah, I just remember back like Asians really loved trading these quarterlies futures, right? And no, and other people on BIM, like everyone else on BIMX loved the perpetual swaps. So yeah, I remember back then constantly be monitoring the quarterlies bases on like from these Chinese traders, and because they tend to be really good indication of market sentiment too. Yeah, actually, like all these products are like BIMX would go negative, and like OKX, you would see OKX like quarterlies shrinking significantly, like the basis and stuff. So
Makes sense. And you talked about quarterlies a little bit, which is actually really nice because that's my next question I have written down. So, what are quarterlies and how do you implement that into your analysis?
yeah, so these two used to be way bigger, like just for a reference, like say today, BitMEX is dying. It traded 1 billion. But Binance traded like 20 billion, right? And but if if Huobi's quarterlies were still alive today, I would think it would trade like 2 billion today. Yeah, usually it would be about like 1/10 of like the perp swaps, which is pretty big. Given now it's only doing like 100 million, which is yeah, we're very like the non-existent anymore. And so quarterlies are like every 3 months they have like a futures that actually expire. It's like, oh, if you had a long, then depending on the day it expires, if you were in profit or not, you just get your P&L, and it's as if your position is just everyone's position on that contract just closed, and then it just the next like season starts, and it's like, oh, that's a new quarterlies. If you want to go trade quarterlies, just go to the new one now, and it's like just like the March, June, September, December's. And yeah, right now the ones are March and they're trading pretty low at like 5% uh annualized yield. So yeah, usually these have gone negative in the bear markets. Back in 2019, yeah, like I it was always a pretty good time to buy if it goes negative for a while. And it's also the flow there is so like toxic. Like people in Asia would just like suddenly be smashing tons of like long leverage into it, and it'll push it like way above every other like Like BitMEX also had a quarterlies, and I can literally like I sometimes don't even have to pull up their data. I can just look at, wow, OKX just like quarterlies jumped way ahead of BIMX quarterlies today, and ton of volume got traded. Then I just assume it's like a long, and it's like it's usually always the case. It is a long if that product start trading like way higher than other ones, even though they literally expire at the same time. And yeah, I remember back then it was just like the market was very inefficient, and people would just be like opening and closing large, very large positions, um, and just like moving that basis. And it's like it's almost like a live indicator of like how degenerate, how like or how bearish, how euphoric the market was. Yeah.
Makes sense. So like we talked about a couple different pieces of derivatives data. How do you kind of like tie it all in together to determine whether the market is at an extreme in terms of greed or capitulation? Like how do you synthesize some of these different metrics that we talked about?
Right. It's I guess it's like a lot to take. Oh, wait. Okay. I almost closed the Zoom meeting. I'm sorry.
You're good. You're good.
Almost clicked the wrong thing. I guess everything you just kind of have to factor in. And I feel like over time, as you just stare at all these products and watch how the market moves, and like you kind of just get a sense of how relatively everything affect each other. But like it's also hard and it's very fun because it's also constantly changing. So it's like so you kind of like, and sometimes the volume don't actually match exactly how strongly that one product impacts the market. So you also have to like recalibrate. Oh, I can't just like volume weight, do it like a volume weighted impact of all these products I just said, and like try to just make a model out of that. Because because some products just naturally have like more mid time frame traders. Like I would say FTX is pretty longer time frame, mid time frame traders, and Binance just are filled with intraday. Like our next hour they close their positions, like or next few minutes even, and like and these traders also use way more leverage. So you kind of have to get an idea of how much impact on price each product has, and like back in 2019, I remember the most aggressive long liquidation, which is exactly September 24th, 2019. Yeah, in 2019, the OKX quarterlies had a lot of longs, but the BIMX perp swap was less long than the OKX one. And that threw a few traders off because they were like, wow, BIMX funding just hit negative at 9K. Why did we just suddenly nuke to like 7,800? What is going on? And then, but then if you check the OKX quarterlies and the Huobi quarterlies, they were trading way higher than the BIMX quarterlies. And when prices started dropping, like the amount of like open interest that was still open on these like quarterlies products back then just absolutely demolished like the market. Like it nuked so hard. Like I think OKX went to like 7,500 on the quarterlies. And before, which is like way below the spot, I think Coinbase was bottom ticked at 8,000 that day. And then, but the more extreme part is like it traded at a premium above Coinbase before the nuke. So like the traders longed above the Coinbase, like longed above where everyone else is, and then they got liquidated where below where everyone else traded. So it was like the biggest swing ever, and it was like so just like but now the quarterlies are way smaller, so you don't have to be worried about making sure there's like I mean there's still traders there. You like so it's nice to like factor in like how long or short it if you want to like have a complete picture, but it's nowhere as dominant as before. Yeah. I remember back then you really had to like be monitoring them.
What is some of the like the derivatives data that you feel like people get most confused about? Like when you log on Twitter and you're like scrolling through your feed, like what really gets you like, oh, like these people don't know what they're talking about? What is is it like funding? Is it open interest or like?
Yeah, so like sometimes I feel like people just automatically assume as price go down, OI go up. Like they're just like, oh, people are shorting, and without even like trying to check anything. So, but like I do respect it way more if they try to at least give a reason why they thought that was the case. Like even if they're wrong, right? Like, and yeah, that's one thing that kind of get me going. I'm just like like they kind of just have like not that much clue of what was going on. And also just like just because coin like stable coin margin open interest rise, that doesn't mean like shorts necessarily have to be squeezed. Like I remember back in late December, people were talking about this massive increase of stable coin open interest on Binance, and they were like, oh, because of the convexity and like the nature of this thing, it happened once before, it's gotta happen. Like the shorts have to be demolished. But then when I look at the data, I was like, well, like 30% of that actually rose while price was rising. And like, and actually that open interest increase was a bit weird. Like it didn't significantly impact funding or price, which was a bit weird. But like even then, you can just take a hint from like the of what happens afterwards to like these people. So say if these were traders, price did go up like a 10% after like that open interest rose in like mid late December, but it did not decrease at all like after it pumped. So it which told me like these this if that was a short, they were price insensitive, or like they were not afraid of price rise breaking like some of the key levels, like 52K back then, I remember. And like while it moved to 52K, like not like barely any shorts were closing, which just made me feel like that wasn't like it didn't feel right if they were short. Yeah.
So when you're trying to gauge like the aggression of open interest, if you will, or like the risk profile of the open interest, do you look at the kind of context of where it came in more so than like funding or some other metric kind of in that sense? Is it more just, looking at kind of the context of, okay, a lot of this, open interest came on this massive pump or a massive nuke? Like, do you just look at it in like relativity to like price action, or like kind of what do you gauge most to kind of come to a conclusion about the positioning of the open interest?
Right. So I like to, like, some people try to predict every move, but like to me, I think it's like it's very worthwhile just like waiting for something to happen and see the reaction of the derivatives from that move. So just for example, like in July of last year, like on the 20th, we went down, like market grinded down every day, like 30K, 34K, 33, 31, like, and then it was like at 28. And then like we suddenly back to 30, bounced back to 32, and that was like a massive open interest decrease. So, and before that was all increasing. So I was pretty confident that like um this inverse correlation did like hint that market was actually being shorted, and funding was also suggesting the same. Like as it grinded down, it was
Going
pretty.
further negative, I remember.
Yeah, exactly. So that was like a great like insight into like just what people were doing, right? And open interest has been like inversely correlated for a while. So that was just like further like validation that people were just so bearish. They wanted to short. Like, yeah, just like signatures like that. And if it's like open interest is like going up every day, prices going up, narratives running high, like during the ETF. Yeah, remember open interest rising slowly but pretty steadily every day. And but funding was pretty um I wouldn't say it's the most extreme we've seen, since May was just absolutely like May was just animal, like, or like March to May was just, yeah, absolutely insane. Like I remember the quarterlies being at like 50% yield, and bro, like that is something you can lock $1 billion position on. You can be like, yeah, like it was just ridiculous, like how much yield you could get and liquidity on like, which just means how many people were putting so much leverage and money at such high premium. Like they were so bullish that they were deciding to pay 50% a year on their position locked in. Like that was just so ridiculous. But in November it was only like 20%, but historically that's still like a relatively high figure. So usually if quarterlies are at 20% open and just grinding up, people are talking about narratives and like how it's going to infinity, is usually a good time to like at least take some profits. Yeah, I would say.
Makes sense. What is some of the data that like most people don't consider that you look at to be really important? Like I watch your streams actually, and you tend to pull up some like interesting charts where I'll be like, huh, I've never seen that before. So like, what is some of that data that many people, I guess, just like don't look at in general?
Um, well, yeah, I have a brain freeze. Like, what did you see on my stream?
I don't honestly, I don't remember specifically. I just remember like you like pulling up some like cool different like charts that I was like, huh. I don't remember specifically what it was.
Yeah, I do think it's important for people to realize which exact futures contracts are moving the price. Because like definitely what leads this market is futures, like majority of the time. And stuff you should be like if you want to like have a full understanding and like be trading, and then you should know which contracts like actually move the price. So like I put a lot of weight on Binance futures and the Binance coin margin futures. Like actually Binance is so dominating lately. They have like two products that does over like 10 billion a day on like literally the same coin. Like on Bitcoin, it's like there's the BTC USDT perp and the USD perp, which is like the stable coin margin and coin margin respectively, and they're both so big. And then you would have like the FTX product. So I check these three products open interest like separately because like they are all different, right? So the FTX one is like okay, people have mixed collateral. They can literally have ETH and long Bitcoin with that. Like that's pretty like dangerous, right? But then if you go to like Binance futures, it's pretty safe because like people are you just trading the stable coins. It's not as degenerate. And then if you look at the Binance coin margin, like they seem to not be super degenerate on the long side either. Because like maybe many more traders are aware they're like holding Bitcoin and they shouldn't like over leverage longing more Bitcoin because they haven't been like getting demolished as like in of the same magnitude as the past of what like usually what happens on like a 20% drawdown of like two coin margin futures. Usually these products just get destroyed. Like the open interest would be like wiped in half or something. But lately it's been um less degenerate, it seems, yeah.
Interesting. Do you look at order books at all or order flow? And then if you do look at either of those two, how do you implement that and tie it into looking at derivatives data?
Yeah, I always look at order flow. So like, but more so just like um throughout the day, like what's going on? Like what like are shorts building up here that have not closed or longs like smashing in, or is the market kind of just neutral? Like then I just have no bias. I just assume I have no edge. Um yeah, just stuff like that. And sometimes like the market could be biased, but then like the price have is about to break a round number, and then then yeah, it just depends a lot really. Like usually around round numbers, like even if like market's long, like you'd also have like some leftover shorts that's ready to like fold on like big round number moves.
Interesting. And so, like, kind of off, like on that note, how do you look at price action as well? I know you're not like super big on TA. I think in one of your streams you said like TA is basically a meme. Do you draw any lines, or is it just looking at whether it's like you talk about like round numbers? Is it how do you kind of like gauge price levels and price action in general?
Sure, I actually do. I don't necessarily draw lines, but I know given that so many traders do, I kind of just like subconsciously like have an idea. So of like where these lines are, right? Like, but like to me, horizontal is just like the most important thing in this market because horizontal is just basically the price, right? And as price go up and down, it affects every single trader's P&L on futures, and that's very important because like traders are very sensitive. Like they're always seeing like their how much money they're winning or losing, right? So like so it's just naturally the most powerful thing, and like horizontal levels are also where people get liquidated, where people's stop loss are, where people entries are. So like I do look at where like these levels are because like I might draw a line like say today we topped at like 38.8, cool. Next time we take that high, we're probably also smashing 39 at the same time. just from like shorts closing. There's just like a like I'm not saying like 100% does, but I'm just saying it's like a very high probability, just because like the way the market is right now. Like say for at the moment, like it's mildly shorted. I wouldn't say it's net shorted, but like yeah. So like that would be my view if I have to give one for what I see right now, right? And and another thing I tend to give horizontal levels a heads up to is like it's just having an idea where people get liquidated. So like I was talking about how like before this move down, like the early to mid January for like 2 weeks, we were sideways at like 42K. Cool. 10% away. That's 37, 38K. So I know there's gonna be like a lot of volume there that's gonna take place, a lot of traders being liquidated. So naturally I just like be okay, be like, okay, 38 is where people get wrecked. And if price move there, I'll need to like start focusing on seeing how much money is buying up these liquidations and watching like if there's big spot buyers stepping in, or if or is like there still too much leverage that needs to be rinsed out, that like we just nuke through it because there's too much liquidations, or what happens, right? So I do have in mind some levels, but honestly, like TA is not really. Yeah, I just never did it really, and I didn't have to use any of like the RSI and MACD to make any money. So like I'm profitable just using my own system. So I just never really looked into it.
Makes sense. And this might be very nuanced or kind of like dynamic in your answer, but what is like your mental weight for determining your market outlook when we look at like, okay, what's the percentage weighted to derivatives or to price action? Or like, I know you don't look at on chain, but like for me, that's weighted a certain percentage in there as well. So like, is there kind of a certain makeup in your mind of saying, okay, like, this is the most important thing, this is, I weigh a quarter of my outlook. Like, I don't know, kind of like how do you like structure that between all the different things that we talked about? Like
Oh,
is
that's a
like is
hard
derivative, I'm assuming derivatives is most important. Like, is that at the forefront of your mind? And then like price action is the second most important in order. Like, I guess it's just a very dynamic thing that.
Yeah, I try to think of all four things, I think. Um like what existing positions have to close, why someone sidelined might have to buy or sell. They could be like wanting to sell for a while or wanting to buy for a while. Like why would they do it now? And where price would cascade, and just in general the chart pattern. Because like I know I'm like pattern sounds like TA, but like I'm more so talking about, say, just like where people get liquidated, to be honest. And like I tend to give all of them weight because like they all impact the market quite significantly. So back in when narratives were still hot, like pretty hot, like as price were moving up back in like January, I remember Tesla bought Bitcoin, right? And it's like that was like the biggest thing for a while. And then I had like in my mind, I'm like, okay, well, I can't just be like randomly shorting, even if I wanted, like, I think this is like a bubble, just because what if like another company buys, right? So like that, so like that's one factor. But then I also see like there's so much open interest, just keep longing. So that's like guaranteed sell pressure in the future. But like, can they be paid out like by a massive spot buyer, like another company? Yeah, they could, but like I don't know. I didn't know how to weight the percentage of these chances because like they were unprecedented, right? And to me, I didn't have. I'm pretty like laid back as a trader. I'm like, okay, if I don't not certain, I don't have to make money on this trade. Like, so I remember back in like after Tesla bought, I very rarely took a position for a very long time, up until after we nuked in May, which kind of just told me, okay, actually that was just leverage and not another big company buying. And yeah, just like stuff like that. And and like just knowing where like people get liquidated is pretty important too, because like that's how price tend to move the most, right? And like if you want to capture the most percentage, like that's definitely have to be like uh thinking about that. And you talk about order books, like I think order books are relatively alpha still, but like especially in a long-term picture. So back in January of 21, you or like February after Tesla bought, you can see the amount of bids on derivatives and spot was just very thick. It was just like spot wanted to buy lower, derivative wanted to buy lower. There's bids chasing the price all the time. But over time, it slowly started thinning out. Like it got thinner in maybe May, like late April after the Coinbase IPO. Like I've never traded any stock, so I don't even know if these terms are correct. Like they went public. I don't even know what that means honestly, but yeah, something happened. People were bullish, but their bids got filled and price didn't really react that much, and so bids started thinning out over time. And then we had to test like Elon saying, "Oh, Bitcoin does pollute the pollute the earth or something," and then we moved down a lot after bids sent out. So it's like you can kind of gauge how much people want to long based off like some of these data. Like, oh, is open interest still rising or is it like flatlining? If it's flatlining, it's probably like we're running out of like apes to keep like leverage longing, or like we're running out of like apes to bid if there was like a liquidation. And if there's no one to bid a liquidation, the price just kind of get hurt very badly. So just like data like order books is more so like how much sideline longs want to keep like buying the dip, I would say, which is quite good data. Yeah.
That was really insightful. And then what are some of like the platforms that you look at to, gauge all these different things that we talked about? What are some of your favorite, platforms in general? I know like Skew is one of them. What do you look at for order books, order flow? What do you like to just look at for general open interest, all these kinds of things?
Yeah, maybe like about just like trading view, everyone uses that. Coinalyze is pretty good for open interest. Like you just type in any product, find it, and then like pull up the open interest from the indicator and it's right there. Skew is pretty good. It shows like there's so much data, like what the quarterlies are right now, what the quarterlies bases have been in the past, what the perpetual fundings are right now across like 10 products and what they were historically. Like these charts are really nice to look at. And for order books, which I don't look at as often, but I do check it probably like every other day, is like Trading Light. And these are like pretty much all the biggest ones. I think none of them are like anything too exotic. Yeah.
Sweet. And then a couple more fun questions. First of all, what is the cat thing all about? Where did that kind of originate from, and like what does it mean?
Well, what do you mean by what it means? Like what does CL means, or like what was cat mean?
Yeah, what does the cat mean?
Oh, like actually it's like a hard question. It's like sometimes you just see something and you're like, yeah, that resonates with me. Hell yeah. It's like how you choose your username online, right? Like why are you like why did I choose CL? Why did Sisyphus choose Sisyphus? Why do you choose Will? Like maybe is that your name or
Yeah, that's my real name.
okay, yeah, okay.
Yeah.
So that's just your name. But like a lot of like when you play a video game, is it still Will or is it something else?
Yeah, I'm pretty boring, but yeah, I know what you mean though. Like you
Yeah.
just intuitively are like, oh, I like, it's just I resonate with that.
Yeah, yeah. So something like that. And but like actually I didn't find this picture it's either light crypto or Trajan, which is Split Capital on Twitter. I think they were sharing like sending me cat pictures or something, and I was like, yeah, this hell yeah, this resonated with me. I just became a cab. This is like 2019, I think. Yeah, and
Cool.
ever since like I was like, dude, it would just be hilarious if I like just got big artists to draw me, and that's since then I'm just like, oh, if I had a winning day, dude, our artists are so cheap because like they don't make much money, so like you can just like pay them to like draw you for like pretty low sums. Like some of them just like a couple hundred, and it's like honestly they put so many hours into it. It's like yeah, relatively cheap in my opinion. So I've like bought tons of like my cat art, and then like people thought it was hilarious, and now I'm like kind of just now known as like this persona. Yeah.
Yeah, cool. And then what are socks? I always see you talking about socks on Twitter. What's that all about?
Oh my God. So it's the full name is Unisocks, right? And it's just like it's literally just a pair of socks, and it's trading at like as I talk about over 90 grand per pair of socks, which is like absolutely like if I have to I'll be honest, it's pretty dumb, right? Like straight up, like. But the thing is like it's kind of like punks and all the other NFTs, which is like except like a punk is like people set it as their profile picture, and I feel like socks people are more so just saying they own one, just like kind of like instead of the face, it's kind of like the watch or the handbag or something. And I guess like since it's like one of the first like thing people collected that came out of DeFi in general, that is why like probably why so many people hold on to it. They're like, wow, this is like Uniswap was like the first thing in DeFi, one of the first thing that like really blew up. And then stocks was like their first, so the first merchandise kind of like anyone really ever put on chain, right? It came out I think in 2019, and I'm pretty sure it's the first like digital physical thing that came out. And now Nike is doing these like clothing that's like has an NFT that comes with it. So it's like it is like I guess you can say it's like a old OG thing kind of, but like this is like I'm not saying like you should really buy one because like yeah they're pretty fucking expensive. So but yeah, it's just like one of these many like historical like items from crypto that exist today that is somewhat valued at something. So it's like also there's like moon cats like thousands of dollars for a cat picture. It seems ridiculous. I mean, this is more ridiculous, but yeah, like punks are pretty ridiculous. Like and now the bored apes are going viral. So yeah,
So it's kind
like
of serious, kind of not.
yeah, kind of serious, kind of not. But there's it's like all these like people also like make a group chat out of these things. Like oh, there's like a gigantic mooncat Discord, right? It's like and there's like a bunch of friends here, and like there's a sock like Telegram chat, a lot of like DeFi OGs like Leshner, Hayden, like Mike that made Rainbow Wallet, like Kane, which is since founder of Synthetics, are like just chatting there. And then you also have like these punk chat groups, which is like way bigger. Yeah, just like it's kind of like a community slash collectible, which is kind of unique because like I don't think Rolex watch collectors just all come together and make like a Discord server and like type GM, or like the Hermes bag owners don't just come together like type GM and like a yeah. So it is a very like our generation kind of thing, I would say. But like I wouldn't say just because like it's cool like you have to buy it, like it's nah, like if you yeah if you have like way too much money, you're so bored, okay fine, it's like like okay, I'm not saying I have that much money, like I bought it when it was cheaper, right? Like it's hard for me to like throw like six figures on a punk or the like yeah, because they're I mean like especially after this year, to be honest, because like this year I actually went outside of my room, and the real world is very cheap compared to crypto. So I'm just like, oh my god, like, this is ridiculous. So yeah, um,
That's hilarious. Hey, CL, I really appreciate you coming on, man. And I really appreciate the conversation. I know I learned a lot. I'm going to have to listen back to this, and I'm sure the listeners feel the same way. Before we wrap up, is there anything that we didn't talk about that you want to kind of get off your chest, or just anything that you want to leave the listeners with before we wrap up here?
oh, I would just say like if you're like a like general like if I have to like give some sort of like trading advice, it would be like depending on like how much money you have currently. Say you have a grand, right? 5 grand, a grand of 3 grand. You I think you're more allowed to be degenerate because then it's like okay, at worst case, you go work at like fast food, come back 3 months later, there's your whole portfolio, or you made even more just from working. And it's like when I think like if you're young, like definitely taking risks is okay, but like if you're like older, it's probably better if like you're not really using leverage. And yeah, that's just my general advice for like risk. and like it is pretty disheartening if you like lose like a trading account, and I've lost probably like 4 in 2019. And I would just say if you truly believed you have an edge and you can just like try to execute better, but like overall like it is also like a very mentally expensive career, in my opinion. So one thing I actually do, like as a trader, is when I wake up, or actually just every moment really, when I'm like thinking about if I should take a trade, is I analyze my mental state. Am I tired? Am I exhausted? Am I tilted? Am I angry? Like, am I gonna revenge trade if I lose this trade? Like, or am I like just pretty content and like I think I'm making a wise decision, or just like making a decision that's like at least reasonable given the data I see. And like just like do you think you're like like if you don't feel good, right? Like, or like sometimes people don't even realize they're not feeling well, so it's like even important to realize if you can see through the clouds and realize if you're actually feeling kind of like you're kind of brain fogged or like stuff like that, because like that like your mood definitely will impact your decisions and your P&L. Yeah, and that's about it.
Awesome. And I just want to give you a little plug in here to just give everyone your Twitter and a handoff to maybe like the eGrow Capital website or anything else you want to plug in before we wrap up.
Oh sure, my Twitter is like just CL, and Ego Capital is just like a group of friends. We fund some projects, but we also like use a lot of the profits and just like kind of just like buy art, commission artists, sponsor streamers, and we don't really ask any one of them to like, oh, like because we sponsored you, like go on your stream and your videos and like tell them about this investment or that investment we made, because like that feels a bit too like show heavy. So like we kind of just sponsor them, and like it's like there's nothing there really, not even like a link. So we kind of just like if our investment do well, we just like commission more art, and that's kind of what we do. And we're probably getting into like more fashion stuff in the future. Yeah, and that's about it.
Cool. Well, thank you so much, CL, and everybody. Be sure to check out CL's Twitter as well as the eGrow Capital website. Really appreciate you coming on and taking the time, man.
Yeah, yeah. Oh yeah. Oh, one more thing.
Yeah, sure.
The Bloomberg article is coming soon. The ego Bloomberg, which is gonna be hilarious because like I don't think they've ever like talked to like a group of like anonymous people. Yeah. All right. Yeah.
That'll be
And then
sick.
that's it. Okay, that's it.
All right, cool. Take it easy, man.
All right. See you.